All right, so now we're going to turn our attention to grantor trusts. All right, grantor trusts are much easier for the following reason. They don't file a 1041. All right, so the big picture of grantor trusts is they don't file 1041s, they don't need EINs. The individuals that basically pay at their own individual tax rate under 1040s. All right, so under the grantor trust regime, there is no trust income tax return. Everything is filed at the individual level under 1040s. All right. Now, how is this accomplished? The code provisions are there. So if you look at Internal Revenue Code 671 through 679, those are the grantor trust income tax provisions. And they say the following, that there is no separate income tax paying entity. The grantor, the trust maker, usually pays the taxes at their own income tax level. All right. Now, there's an exception here where we're going to look at beneficiary defective trusts. All right. So basically, the grantor trust provisions under the code 671 to 679 say the trust is not a separate income tax paying entity. The taxes are paid by the grantor, the trust maker, or the beneficiary. All right. And it simplifies the income taxation of the trust because no 1041 is required and we don't have to get an EIN for the trust. All right. So typically when we work with our clients, this is our default. We tend to design our trust as a grantor trust for our clients to save them the headache of having to file a 1041. All right. Now, that's not always the case. Again, there are exceptions, but generally speaking, it's much easier to set up a trust as a grantor trust to avoid having to file a 1041. Plus, you're avoiding that compressed income tax bracket of 37% at only $13,000 of income. Okay, so again, everyone's different, but if the trust beneficiaries and the grantor are in a lesser tax bracket than the 37%, then the grantor trust provisions may be advantageous for income tax planning. All right. So in addition, let's say your client has a business and they're taxed as an S corp under 1361 of the code. A grantor trust can own stock in an S corporation. Okay, so this is another advantage when we're doing planning with our clients. If they're business owners and we want their business to be owned by their trust for succession purposes, to avoid probate court and those other benefits. Under the code, the Internal Revenue Code, a grantor trust can legally own stock in an S corporation. It doesn't destroy the S corp tax election. All right. The only exception there is that they have to be U.S. citizens or U.S. tax residents. If they're foreigners, then this provision does not apply. So there's the code provision 671. It talks about the grantor or another person, a beneficiary, can be treated as owner of any portion of the trust. Again, they pay the tax at their own individual rates under 1040. All right, so an example, actually, before we get to intention defective trust, let's run through a quick example of a grantor trust. So let's say husband and wife, they have children, they come to our office, they say, hey, we want to do some estate planning, we want to set up a trust. So a very typical example of what we do for our clients is we'll set up a revocable living trust. That's revocable. They have 100% control. They can make changes while they're alive. And this revocable living trust will be taxed as a grantor trust. It's an ignored entity for income tax purposes as long as they're alive. So we'll set up their revocable living trust. We'll title their house or homestead where they live. We'll put their house in the trust. We'll put their personal bank accounts in the trust. We'll put their life insurance in the trust. Pension accounts, retirement accounts cannot go into the trust. However, the trust can be the beneficiary of retirement accounts. And that's something that we discuss as an option with our clients. And again, as long as the client is alive, the trust maker, it's a grantor trust for income tax purposes. No need to file a 1041. No need to apply for an EIN number. They just use your social. Okay, so that's the advantage of grantor trusts. They're very easy to administer for income tax purposes. We don't have to file a 1041.